Arthur Hayes has issued a direct caution to Bitcoin holders about the dangers of relying too heavily on the actions of a single figure, specifically Michael Saylor. As a co-founder of BitMEX, Hayes has positioned himself as a respected voice in the crypto space, and his recent remarks on the Wolf of All Streets podcast have added a new layer of discussion to how investors are interpreting Bitcoin's market dynamics. Michael Saylor has become a household name in the Bitcoin world, largely due to his company's aggressive accumulation strategy. His firm, Strategy, has amassed a Bitcoin holding of 843,738 coins through a combination of equity and debt instruments. This includes a recent acquisition of 24,869 BTC and a reported BTC yield of 12.6% year-to-date. Saylor's actions are often seen as a bullish signal, with many investors using his company's treasury moves as a proxy for their own investment decisions. Hayes argues that this approach is flawed. By anchoring investment convictions solely to Saylor's moves, Bitcoin holders are effectively outsourcing their risk assessment to a single corporate strategy. That strategy, however, is not without its own financial complexities. Strategy has funded its Bitcoin purchases through a perpetual preferred stock offering, and despite the company's Bitcoin yield, it reported a $12.5 billion net loss in Q1 as Bitcoin prices dipped during that period. These financial realities are often overlooked in the simplified narrative that Saylor's buying equals Bitcoin's bullish potential. The core of Hayes' warning lies in the principle of diversification and independent analysis. He emphasizes that no single market participant, regardless of their visibility or influence, should serve as the sole basis for investment decisions. Saylor's strategy is a corporate treasury move, not a market forecast. Investors who? Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Interpret it as such risk misaligning their own financial goals with a company's financial structure and market timing. Bitcoin holders must also consider the broader implications of personality-driven investment. Saylor's influence has helped shape market sentiment, but it also introduces a risk of herd mentality. When a prominent figure signals a move, others tend to follow, which can lead to inflated valuations and sudden corrections. This dynamic is particularly pronounced in the crypto market, where sentiment can shift rapidly and without warning. Hayes' warning is not just theoretical, it has real-world implications for Bitcoin holders who are currently managing their exposure. As the market continues to evolve, the influence of individual figures like Saylor will likely remain a factor, but it should not be the only factor. Investors are encouraged to look beyond the headlines and consider the financial mechanics behind the moves they are following. The next signal to watch in this context is whether Strategy continues to expand its Bitcoin holdings and how the market reacts to it. If Bitcoin holders continue to rely on Saylor's actions as a guidepost, the market could see further volatility as sentiment shifts. Conversely, if investors begin to diversify their sources of information and analysis, the market may become more resilient to personality-driven swings. For now, the conversation is clear. Bitcoin holders should not anchor their investment strategies to a single source of validation. The market is complex, and while figures like Saylor can provide useful insights, they should not be the sole basis for decision-making. The key to navigating the crypto market is a balanced approach that combines independent research with an awareness of broader market dynamics. The mechanism at play here is the psychological and behavioral tendency of investors to follow authority figures or high-profile actions without fully understanding the underlying financial structures. This can lead to misaligned expectations and increased exposure to risks that are not clearly communicated. The stakes are high for Bitcoin holders who are using Saylor's moves as a primary signal. If Strategy's financial position weakens, or if the company decides to reduce its Bitcoin holdings, the market could experience a sharp correction. This is not just a risk for individual investors, but for the broader market sentiment, which can be heavily influenced by a single entity's actions. The next signal to watch is whether Strategy's Bitcoin accumulation continues and how the market reacts to it. If the company maintains its aggressive buying pace and the market interprets it as a bullish signal, it could lead to further price increases. However, if the company's financial position, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. becomes a concern or if it begins to sell, the market could experience a significant downturn. This is why Hayes's warning is so important. It serves as a reminder that while figures like Saylor can provide useful insights, they should not be the sole basis for investment decisions. Investors must be prepared to conduct their own analysis and make decisions based on a comprehensive understanding of the market. In conclusion, Arthur Hayes's warning to Bitcoin holders is a call for greater independence in investment decision-making. The crypto market is inherently volatile and influenced by a wide range of factors. Relying too heavily on a single figure, no matter how influential, can lead to misjudged risks and missed opportunities. By diversifying their sources of information and conducting independent analysis, Bitcoin holders can better navigate the complexities of the market and make more informed decisions.